Welcome to the Silent Trading channel on Tuesday the 31st of March. Today I'll be analyzing the gold chart and updating about where the price is going to right now and which price action is it on, right? Which side of the price action is it on? Is it on the bearish side or the bullish side? But before I start, please subscribe, like, comment and share if you like this video and to support me in my trading journal. Okay, so today I'll be starting first on the 4 hours chart because we will always be looking on the 4 hours chart because the 4 hours chart is the main chart, right? Is the main time frame that we need to be able to enter our position, right? For the daily and the weekly one, that is only for the top down analysis. That is for doing detailed analysis, is to see whether the trend or the price action on the daily, on the weekly time frame, on the weekly chart, is it on the bearish side or the bullish side, right? It is not for entering a position, but only for looking at the bias of the chart. Okay. So first thing first, we're going to be looking at a 4 hour time frame or the 4 hours chart. As you can see, the 4 hours chart has already formed a bearish price action. But is it a valid bearish price action yet? No, it is not a valid bearish price action yet. Because why? Why is it not a bearish price action yet? Because this bearish price action was formed, right? But it hasn't been able to break any support yet, correct? Because for a bearish price action to be complete, right, it needs to at least break one support. That is the minimum, right? It could already form a bearish price action that is complete, that is a valid one in the lower time frame, like 1 hour time frame, like the 30 minutes. But in the 4 hour time frame, bearish price action is not complete yet, which means this is not a valid bearish price action, correct? So since this is not a valid bearish price action, we are not going to be able to confirm that the chart is just pushing up to go down, that the chart is retracing to go down, because we do not know the price action right now, right? We can also conclude, right, like how you guess that this could be a valid bearish price action. I could also guess that this could be a valid bullish price action too, right? So never ever use guessing as a catalyst to analyze, because by guessing you are just gambling your whole money away, right? We need to analyze in detail, right? In detailed sense, in detailed form. We need to do accurate analysis. Because why? Because the reason is to really understand where the chart is moving to, where the chart is accumulating buy side volume, sell side volume, right? So once we know that the buy side volume at either side is being accumulated, we are not going to be entering a position at that specific point until it has taken out that buy side volume that has been accumulated, right? We are only going to be able to sell after the sell side volume that is accumulated has been taken out, correct? So once the accumulated volume has been taken out, will we only enter a position, right? So right now the chart is pushing up and has already pushed up to form a high wick, right, while not attacking resistance. It could also be said in the 4 hour chart that this could be a retracement to go downwards. But are we going to confirm that this is a retracement to go down? Not yet. Why is it so? Because if you're going to be selling here right now, you could also be going against a trend. Because why? Because if the 4 hours chart, if this 4 hour candle suddenly decides to push up and then start attacking resistance, your sell position over here, your short position over here would be going into a heavy drawdown, and you definitely you wouldn't want that, right? So we wait for the chart to reveal price action, and then we only enter on the price action, because we will never be entering at the spot that is still risky, right? We wait for price action to be formed, for price action to be confirmed before we enter a trade, which means for this bearish price action, I totally want this bearish price action to push down and break at the least this support. And if it is able to break this support, the next thing I will do is to wait for the chart to retrace, right? The next thing I will do is to wait for the chart to retrace after breaking this support, and the retracement, while not attacking resistance, it is where I'm going to be selling. And if I sell and the price start to push down and attacking support, triggering buy limits, triggering buy side volume, right, accumulating buy side volume, we will then conclude that our sell side position is safe after buy side volume start accumulating, right? If the chart push down to attack support, attacking support means triggering buy limits, attacking support means accumulating buy side volume, and once buy side volume is accumulated, the next thing the chart is going to do is to dump on the chart, is to dump on the price, right? And only after dumping we will be entering a buy position. And why do we enter a buy position? We are buying against the trend while waiting for the chart to either pull back or either retrace or either reverse from over here, right? So when the chart dumps and you buy, if the chart is going to retrace and to go down, you will buy and close your profit, claim your profit at this retracement, correct? But if you really want to hold your position for as long as can be, you wait for the chart to push up, break resistance, right, and forming a bullish reversal. And after the chart has formed a bullish reversal, the next candle retracement, if this retracement is a retrace to push up, your position over here will be safe, right, will be at least one layer safe. But if the chart is retracing and then start pushing up while not attacking resistance, it is a sign that it is going down. So if you're still holding that position over here and then the chart start pushing up but not attacking resistance, be informed that the chart is trying to go down, right? Be informed that the chart is trying to dump once more, which means if you are buying over here and the chart won't push up to attack and break resistance, it is telling you that it is not going to accumulate sell side volume. And by not accumulating sell side volume, it is telling you that it is ready to go down, it is ready to dump, right? So when you enter a position over here, it is going against the trend. Because why? Because the chart is dumping. And if you go against the trend, you either claim your profit at retracement or you claim your profit after a bullish reversal is formed over here and become complete over here. And then after it is complete, went up to attack resistance, and then went up to attack more and more resistance, retrace and attack more and more resistance, which means your position over here is multiple layers safe. And if your position is multiple layers safe, it is also telling you that your position is going onto a profit spree. It is going up and up, further and further, at the least until what? Until it has stopped retracing and instead start reversing. That is a spot that you want to be closing your position if the chart start reversing, right? So right now, you either wait for the price action right now to form, right? Either by breaking resistance or either by breaking support, or you can do another thing, do a more detailed analysis by looking at a 1 hour time frame. And the 1 hour time frame has been telling me that the chart has already what? The chart has already formed a bearish reversal on a 1 hour time frame, pushed down and went to attack support, and then was able to break support or not. Seriously, it is able to break support, but the problem is after breaking support, it has right now break above, and this break above is also telling us that it is trying to break above more. It is trying to expand upwards, and an expansion upwards is imminent if the chart start accumulating sell side volume. And this green candle over here to push up, it is already accumulating sell side volume over here. And now this current candle over here is trying to form both top and bottom wick. And this top wick has been formed above previous candle wick, which means it has a chance of accumulating sell side volume further and further, which means this candle has a chance of pulling back and then pushing up, or the next candle pushing up to attack this resistance and then start expanding upwards, right? But we cannot be sure, we cannot guess, we cannot have too much confidence in ourselves. We need to understand the chart based on reasoning, not on emotion, not on confidence, right? Confidence is needed to be able to trade, but too much confidence can be your downfall, right? You do know this logic. Too much confidence would always be your downfall, because overconfidence is the key to death, correct? In everything you do, overconfidence is the key to death, right? Always be prudent, always be aware of your surrounding, always be aware of what you're doing, right? Always be aware of the action, of the market execution that you're going to execute. Don't execute on emotion, execute on reasoning, execute on logic. If the reasoning is not enough, if the criteria is not enough, never ever enter a position, right? So right now we wait for this 1 hour time frame, 1 hour's chart to form a bullish price action before we start buying. And if the bullish price action is formed and it is confirmed, we then start buying at retracement. Actually, this retracement is where I'm gonna be buying, because why? Because a bullish reversal has been formed over here, push up and attack support, and was able to break support, push up and attack resistance over here, and was able to break resistance, which means this candle retracement is where I'm gonna buy. And if I'm buying, I'm then waiting for the chart either at the next candle to push up and attack resistance and break resistance, or if the chart is pushing up but not attacking resistance, I will consider closing my position over here. Because why? Because the price action is right now going against me, right? So when you enter a position, you don't just enter a position and wait for your position to hit your TP and stop loss. You look at the chart and decide based on the price action that it is showing you. Don't ever hold on to a position for too long, because if the price action is already moving against you, why would you be holding on to that position, right? So hold on to your position based on reasoning, and close your position also based on reasoning, not based on emotion, not based on that you're scared, you're afraid that the chart is going against you. Nope. You know that the chart is already going against you and you close that position early. This is being professional. This is being an expert in what you're doing, right? Don't just open a position and wait for the chart and wait for the market to hit your TP and stop loss. No. You enter based on understanding and you close based on understanding. If the chart is really not going to your TP, but if it has already gained you enough profit, do close it, right? Don't always wait for the market to go to your TP, to your take profit, because it is not always going to that take profit, right? The market could always go against you anytime, anywhere. So do understand that this is actually the basic understanding, that the market will always go against us. So we are not going to be holding our position for too long, because too long of a position always gets swiped, always gets swept out, always gets taken up. Okay, so that is all I'm going to be analyzing for you guys today, and I really look forward to seeing you guys every single day that I'm here analyzing, and I'll see you guys tomorrow. So for today, see ya.